Hello everybody, welcome to Leeb's MarketForecast.com video for the 12th of September 2012. As expected, the German High Court ruled favorably today on the constitutionality of the European Stability Mechanism, or ESM, the prospective bailout fund, permanent bailout fund for the Eurozone. While the ruling is overall a positive development, it was not an unqualified approval because the court also set forth conditions for the ratification of the ESM, including one that prevents Germany from increasing its contribution to the fund without getting parliamentary approval first. Germany may now have to incorporate some changes to the ESM treaty to account for the court's ruling. So while the policymakers do appear to be moving in the right direction, there are still plenty of opportunities for hiccups. And also, there's some bad news coming out of Greece today, which had been, for the most part, staying out of the spotlight lately. It appears now that Greece will not get its next installment of the bailout money, worth more than 30 billion euros, until at least November, when international inspection officials complete their review and decide whether Greece deserves to get paid, basically whether it has held up its end of the bargain enough. Greece had been expecting money from the international creditors by early October and could very well run out of cash in what could be another ugly replay of that will they default or won't they default saga. Of course, tomorrow is the big day when the FOMC will release its latest policy statement. The central bankers are expected to do something, while the Fed could very well extend its pledge to keep interest rates super low into 2015 or beyond. What market participants are really looking for is another major bond buying program, or quantitative easing, or QE3 for short. The danger, of course, is that the Fed could disappoint. If there isn't at least some sort of a concrete action plan mentioned beyond the same promises to do something if necessary, the markets could very well give back much of their recent gains. The S&P 500 and the Dow Jones Industrial Average are both at four-year highs and could be ripe for a sizable correction if the Fed comes up short tomorrow. But we think that even if the Fed delays taking action tomorrow, we think that easing is really just a matter of when. While a Fed disappointment tomorrow would likely be a short-term negative for commodities in particular, the decline, we think, would only be short-lived and would create a very nice buy opportunity once again. Thank you for watching and join us again soon.